Hi there, welcome to Kneppy Invest. One of the most exciting things that can happen to any company you have in your portfolio is when there is a takeover bid for said company. And the reason it can be really exciting is because typically, and I might use this word often in this video, because typically the takeover bid has to be at a premium to current valuation or share price. And when I say premium, I'm talking about 20%, 30%. 40% or even 50% and higher than the current valuation. So just imagine if you own a company in your portfolio and then in one day it's up over 50% because there's a takeover bid for that company. That's why a lot of shareholders love when there's takeover bids for their company. Not all shareholders like it. There are some shareholders who don't like it, but that's not a discussion for today's video. So that is what should happen when there is a takeover bid for a company. It should be at a premium to current valuations. But we have just found out, and I have never seen this before until a few weeks ago, the takeover offer doesn't have to be at a premium. In fact, it can be at a discount to the current valuation. Hence, Slater and Gordon's What the F takeover bid offer. Now, before we discuss this takeover or what the F takeover bid for Slater and Gordon, just a brief history about this company. If you don't know anything about Slater and Gordon and their history, it's really good to go back to 2015 and just to see the disastrous year it was for this company back then. Because before March 2015, this was a market darling on the ASX. Share price in a beautiful uptrend. I think the share price got as high as $9. And we'll look at the chart, the long-term chart later in the video, and you'll see if you look at that particular chart, the share price was something like $7,000. It wasn't $7,000. It was more like $8. But this company has absolutely destroyed their shareholder wealth because of what happened in March 2015 when Slater & Gordon management decided to acquire a professional service division of a law company called Quindell out of UK. It was for $890 million. They raised capital and also went into a fair bit of debt to acquire this particular division of this law firm. And from the moment they made this acquisition, everything just went absolutely wrong for this acquisition and for Slater and Gordon, and the share price absolutely tanked. And then finally, I think this was back in 2017, they had to recapitalize. And a part of this recapitalization, because everything went absolutely wrong, is they highly diluted shareholders. In fact, 95% of the shares went to the debt holders. So the current shareholders only retained 5% of the company, which means debt holders had the majority interest in this company. And really, Slater and Gordon fell off everyone's watch list because of what happened between 2015 and 2017. Now, you can still trade in Slater & Gordon shares, but the trading in the shares was quite illiquid, and we still had these debt holders maintaining a majority interest in the company. For instance, if you do look at the 20 largest shareholders, by far the largest shareholder is AIOV Finance out of Ireland. And one of the reasons they are the largest shareholders is because they did give Slater & Gordon a fair bit of debt back then. So they hold 53% of shares in Slater & Gordon. So it's very important to know this as we move forward to this What the F takeover bid for Slater & Gordon. To be honest, I haven't really been following the fortunes of Slater and Gordon over the past 6 years, since 2015 or 16. I was interested in this company, not taking investment, just following the fortunes of this company during 2015, because this was a disastrous year for the company. It was a destroying year for the company because shareholder wealth was absolutely decimated because of this acquisition of Quindell's professional services division. So I haven't been really following this company all that well. On the 21st of February, the company did go into a trading halt, and I didn't even realize they were in a trading halt, but I did see the share price rise 6% on the day they released their half-year results when they came out of the trading halt. And I thought the reason why the share price rose 6% on that day was because the market liked the half-year results. So I did have a look at the half-year results, and they were okay. But I did not notice this other announcement released among the other 3 half-year result announcements: the half-yearly report and accounts, the media release, and also the investor presentation slides. There was another announcement called the Bid Implementation Agreement with Allegro. And that seems like a takeover bid announcement. And usually, if there is a takeover bid, and typically, usually the takeover bid is going to be at a premium, usually you see the share price rise like 20 or 30%. But the share price only rose 6%. So I completely missed this takeover bid for Slater and Gordon until a few days after the 24th of February. Now on to this particular takeover bid by Allegro for Slater and Gordon. Now, I do believe Allegro is a private equity firm. And me being very cynical about private equity firms, what I believe Allegro will do is they will try to dress up this pig as a supermodel over about a 5-year period by doing magic things with the financial statements, doing magical things with accounting. And then after about 5 years, they will try to put Slater and Gordon back onto the ASX at a staggeringly higher valuation than it is now. And if you do see that happening, run the other way, because it is not going to work out well for shareholders. And I do have history backing me up with my cynical thoughts. Now onto this particular takeover offer from Allegro. Allegro to make 55 cents a share cash off-market takeover offer for 100% of the ordinary shares in Slater and Gordon. Slater and Gordon's board unanimously recommends that shareholders accept Allegro's offer, which is fair enough, usually. And the board believes that Allegro should provide Slater and Gordon with a stable capital base and a supportive operating environment. But shareholders say, who cares about that? Because if this offer proceeds all the way through, we're no longer owning shares in Slater and Gordon. So who cares if it's a stable capital base and a supportive operating environment? Now on to what makes this a what the F takeover bid. Remember, typically, usually when there is a takeover bid for a company, it's going to be at a premium to the share price or valuation of a company before the takeover bid is announced. And this particular takeover bid for Slater and Gordon was announced on the 24th of February. The previous trading day, the share price of Slater and Gordon closed at 56.5 cents. Remember, Allegro to make a 55 cents a share cash over offer for 100% shares in Slater and Gordon. So that offer, takeover offer, 55 cents, was at a discount to the share price the previous day to this announcement of the takeover bid. I have never seen this happen before, not only on the ASX, throughout the world. It probably has happened before, but I've never seen a takeover bid that's at a discount to the share price the previous day, the previous trading day, to the takeover bid announcement. And even interesting enough, and also what the F happened, on the day they announced this takeover bid, the share price went up 6% and closed at 60 cents. Why were people buying shares in this company at 60 cents when the takeover bid was at 55 cents? Did they believe there was going to be more bids for Slater and Gordon at a higher price? Did they believe this was fantasy land? Why would management accept a takeover bid at 55 cents? But that's exactly what management did. They supported this takeover bid for Slater and Gordon at a discount to current valuation. Yes, management accepted this discounted takeover bid. Your directors unanimously recommend that you accept Allegro's offer. Why would they do this? Why would management accept a takeover bid that is a discount to current valuation? It's absolutely absurd if you don't understand the history of this company. And they even put in some points about why you should accept Allegro's offer, even though it's at a discount to valuation. Allegro's offer has been independently assessed as fair and reasonable. I do question that independently, but why would you say, even if it is independent, why would you say this offer is fair and reasonable when it's at a discount to current valuations? Allegro's offer is all cash and provides certainty of value for your SNG shares, at a discount to current valuation. Avoidance of possible refinancing requirement and associated dilution risk. That's a fair point. There is a possibility, or there was a possibility, that Slater and Gordon might have to raise some capital because they were in debt, and that could dilute shareholders. The Slater and Gordon share price is likely to remain volatile with limited to trading liquidity if Allegro's offer does not proceed, but that's not a reason why the offer has to be at a discount to current valuations. You may face significant risk as a minority shareholder of Slater and Gordon. Well, they're already at a minority shareholder because the debt holders or the previous debt holders own majority of shares in Slater and Gordon, so there's not a reason to accept Allegro's offer, and no superior proposal has emerged as at the date of this target's statement. So this particular slide was maybe a few weeks after that initial takeover bid for Slater and Gordon, and there was or has not been any proposal or superior proposal for Slater and Gordon. So these are the reasons why management say you should accept Allegro's discounted takeover bid for Slater and Gordon. Now let's have a look at some charts for Slater and Gordon. We'll look at weekly charts. The first one here is a 4-year weekly chart going back to April 2019. And really, the share price has been drifting lower through this 4-year period, though the low was during the COVID-19 financial panic when the share price of Slater and Gordon got as low as 44 cents. Current share price is around about 54.5 cents, just around the takeover bid offer. But over the past, we'll say 9-10 months, share price has been going sideways, and we don't see a lot of volatility, or haven't seen a lot of volatility in the share price. So that one point the management of Slater and Gordon said in relation to the volatility of the shares in Slater and Gordon, it's not really true. Share price has been going sideways over a 9 to 10 month period. Now to the longer term weekly chart going all the way back to 2014. And remember, maybe you don't remember because you haven't been investing that long, but Slater and Gordon was a market darling between about 2012 and the early parts of 2015. Even when they announced this acquisition, the share price actually rallied on the day of the announcement and then started to fall because there were quite a few investors, experts, who were quite wary about this acquisition of Quindel's PST. And then 2015 was absolutely disastrous for Slater and Gordon. Share price fell from something like $7.20 to below $1 in 1 year. Now, according to this TradingView chart, the share price high in March 2015, in fact, it would have been maybe April 2015, was $720. But that's after or taking into account the recapitalization of Slater and Gordon back in 2017. And there would have been a consolidation of shares, and more than likely, it would have been a 100-to-1 consolidation. So share price wasn't $720. It's all relative to take into account that recapitalization. But if you were holding shares in Slater and Gordon in 2015 and you remained a shareholder of this company all the way through to now, it would seem like the value of your one share in this company has dropped from $720 to a current share price of 55 cents. So that's the exact opposite of what management want to see happen to a company they are operating. In fact, that's the exact opposite you want to see if you're a shareholder of a company. You want to see your shares go from 55 cents to $720, not the other way around. So Slater and Gordon has been absolutely disastrous for long-term shareholders of this company. Anyone who's been holding shares in this company over the long term have seen their wealth been absolutely destroyed, decimated, if you will. So that's all I have looking at this Slater and Gordon what the F takeover. A takeover offer that's at a discount to the current valuation. I have not seen this happen before. Doesn't mean it hasn't happened before, but this is the first time I've seen a takeover bid for a company that is at a discount to the current valuation. Usually it's at a premium, and a significant premium at that. If you have any questions about this takeover offer, if you have any questions about Slater and Gordon, or maybe you're a long-term shareholder of Slater and Gordon, what are your thoughts about this takeover offer for the company? So leave any thoughts, any questions, any opinions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.